Hello dear traders. According to analysts, the US economy has entered 2024 with considerable growth, which may allow a soft landing. However, the Federal Reserve will have to keep their key interest rate at high levels at least until the third or fourth quarter. At the same time, stock markets may face noticeable fluctuations. As for economic indicators, the fourth week of January ended with a bulk of positive macroeconomic data. US GDP grew by 3.3% year-on-year against the 2% forecasts. According to the results of the fourth quarter, consumer spending, which accounts for more than two-thirds of US economic activity, increased by 2.8%. The number of first-time unemployment claims for the previous week climbed by 25,000 to 214,000. Judging by history, it's not an alarming increase. In other words, all reports confirm that economic growth in the US is still in force, while inflation continues to fall. In fact, the Federal Reserve has every reason to start rate cuts. However, it will hardly do this in January. Traders will find an answer to this question tomorrow when a two-day FOMC meeting ends. Now let's focus on the weekly performance of the stock market during the week ending on January 29th. Thus, the S&P General Market Index continued gaining value on a weekly time frame. It even reached new highs, which noticeably differs from the previous ones. Last Tuesday, the S&P touched the level of 4,850 points, adding 0.3% in price. After that, the index entered a consolidation phase. As a result, it remained almost unchanged on Wednesday, but still added 0.08% to hit the fourth all-time high. The same situation occurred on Thursday when the S&P climbed to 4,894 points by adding 0.53%. However, on Friday, the S&P ended its five-session series of record highs and closed with an insignificant decline of 0.07%. This time, the decline could be mainly explained by a decrease in Intel stock prices and not by macroeconomic data. The company, which is one of the world's largest manufacturers of microprocessors, announced a gloomy revenue forecast. The preliminary data was so far from market expectations that Intel shares slumped by almost 12% to a six-week low. For comparison, before the forecast publication, the share price exceeded $50. Yesterday, it tested a breakout level of the support line at $43. The company cited the weak personal computer market as the main reason for the failure. The Dow Jones Industrial Average managed to repeat its unprecedented growth only at the end of last week. It jumped above 38,000 again. Early last week, the index lost 0.6%. As a result of a two-day drop recorded on Tuesday and Wednesday, the Dow Jones tested a support level of 37,806 points. However, Thursday was a day of triumph for Dow Jones as it showed the most significant rise to 38,049 points. As a result, the U.S. Industrial Stock Index jumped immediately by 0.63%, and on Friday it added another 0.16%. The NASDAQ Technology Index neither repeated from its highs. During these 7 days, it was hovering within the range of 17,300 to 17,650 points. Curiously, the NASDAQ now needs less than 4% to touch its record highs seen in November 2021. However, on the trading chart, we see that on Monday, the NASDAQ closed with a tiny drop. The NASDAQ started gaining in value on Wednesday, January 24th, when Meta's market value surpassed $1 trillion. This happened for the first time since September 2021. Thus, their combined market capitalization of Alphabet, Microsoft, Apple, Amazon, and Meta amounted to almost 25% of the S&P index. Against this backdrop, IT companies have a huge influence on market dynamics. Meta shares have soared to $405 from $384 since last Wednesday. Moreover, analysts at Bank of America Global Research raised the target price of Meta shares by $20 to $425 at the end of last week. Analysts also stressed that the surge is driven by revenue growth potential, cost discipline, and optimism in the field of artificial intelligence. Notably, in the weeks to come, large-cap companies may issue reports that could seriously affect Wall Street's rally. What's more, weather or even human factors may also affect the market situation. For example, last Wednesday, Archer-Daniels-Midland shares collapsed by 24.2%, showing their biggest drop in recent decades. The collapse in the market occurred after one of the executives went on vacation. The fact is that the company's chief financial officer was on administrative leave because of an investigation. Archer-Daniels-Midland owns and operates elevators and a transportation network for harvesting, storing, cleaning, and transporting agricultural raw materials. The company's revenue outlook for the current year has been significantly lowered. Tesla shares tumbled overnight by slightly more than 12% to the lowest level since May 2023. This happened after Elon Musk commented on a slowdown in sales growth in 2024. Moreover, the forecasts remain disappointing even against the background of lower prices for Tesla products. U.S. corporation Johnson & Johnson is also among those firms that lowered their revenue outlook. Netflix shares advanced by 10.7% amid impressive quarterly results and a more than anticipated rise in the number of subscribers. As we can see, the U.S. stock exchanges have ignored the Fed's announcement that rate cuts will hardly take place soon. Instead, investors welcomed the resilience of the economy. At the same time, market strategists foresee a rosy future for the stock market in 2024. For example, experts at New Age Wealth suppose that market trends will hardly be stable. Instead, there could be sudden changes and unexpected market reactions. At the same time, the S&P could trade in a wide range of 4,200 to 5,200 points. Morgan Stanley sees the S&P target for December 2024 at 4,500 points with a trading range from 4,100 to 5,100 points. Stifled strategists assume that the main U.S. stock index will hover within the channel with lower limits at 4,600 to 4,750 points and upper limits at 5,100 to 200 points. Although the U.S. stock market is rolling at the moment, there are some alarming signals. Analysts warn that it's weaker than it seems. By the way, the new week is expected to be eventful. Most of the upcoming events may have a considerable influence on market optimism. All eyes will be turned to reports from Alphabet and Microsoft on Tuesday, the FOMC meeting results on Wednesday, reports from Apple and Amazon on Thursday, and Meta Platforms' financial results on Friday. We continue to monitor the market situation to keep you abreast of recent events. Subscribe to our channel and comment on the video. The InstaForex TV team is already working on the next global market review. See you next week on February 7.